Welcome to Me Financial, the podcast designed to inspire your financial life. Hello, everyone, and welcome to the podcast. I am Michelle Moses, your host, and today we are going to talk about an alternative investment that is invested in hotels called a private placement, and we are going to be talking to Peachtree Hotel Group. And to do that, I have Brian Dunn, who is the managing director at Peachtree Hotel Group, to join us. Thank you for joining us today, Brian.
Thank you so much for having me. We're excited to talk to you about hotels and excited to be on the podcast.
Yeah. So Peachtree Hotel Group, let me, I'll get to my, I see, I just want to launch right into my excitement about Peachtree, but that's specifically why I wrote something here so that I would actually introduce rather than going into how excited I am. So Peachtree Hotel Group operates, finances, and invests in full service hotels. And so I think this makes it sound very basic, but they are really kind of what I call a market maker in the hotel space. They build hotels, they buy hotels, operate them, sell them. Am I missing anything? Invest in, finance them.
Renovate them. Yeah, that's a big part of it. And one of the pitfalls of hotels for sure.
Okay. All right. And Peachtree mainly deals with Hyatt, Marriott, and IHG. Is that correct?
Correct.
Okay.
Yep.
And I, just as full disclosure, I am an investor in them and I have clients invested in them, but I am a big fan and I get a lot of questions about how some of these alternative investments work. And so I thought I would get one of my favorites on here to talk about it. And so thank you again for joining us, Brian. And so Brian knows about all of the funds there, and we're just going to talk about how some of these deals are structured and what you can expect to go into them. We're not going to be talking about a specific deal. We're not going to be talking about like a specific fund. Okay, so let's go and we'll back up a little bit and talk about what does Peachtree do? And I know I kind of touched on it, but can we go a little bit more into like how long they've been in business and that sort of thing?
Yeah, absolutely. So we were originally founded in 2007, really as a family office. It was our three principals that came together, all three of which have backgrounds in banking or banking with regards to hospitality or ownership in hospitality assets. And they came together really to invest their own money and their friends and family money. And then they're recognized as one of the market leaders and had the opportunity to expand into the institutional platform that we are today. But we've always, as you kind of mentioned, focused in the premium brands, the Marriott and Hiltons and IHGs of the world. And the reason that we like those is that they have more than anything, the app that's on your phone that takes you to their homepage, and their loyalty points do a great job at driving occupancy.
And I think it's great that you guys focus on that because I want to stress, you have contracts, the hotels have contracts with Marriott and Hilton, right? And there's a lot of stipulations with that, with when you need to remodel a hotel. And so can you go into some of that too?
Yeah, absolutely. So the premium brands typically have what's called like a 7-year property improvement plan, and we call them PIPs, but property improvement plan is what they are. And that's effectively, capital that you're going to need to put back into your hotel to do a renovation to maintain the brand standard. If you don't do that, you end up losing your flag because this is a franchisee's franchisor agreement. And it's a way for the premium brands to maintain experience from, let's say, a courtyard on the West Coast to a courtyard on the East Coast. And again, it drives occupancy because at the end of the day, the folks that are going to stay there know what they're going to get. It's not going to be, I often get the question about Airbnbs, and you don't know what you're going to get with an Airbnb. Sometimes they're phenomenal experiences, and sometimes they're not. And then sometimes you check out and you've got an extra $300 on your bill for whatever it might be. So you know what you're going to get with what we do.
Right, and so they're trying to maintain consistency across the United States, or really across the world, right?
Yeah, okay. Exactly. And then, you mentioned that we focus in the limited and select service. We really like that model. It tends to be resilient to economic downturns. There's cost centers that are easy to control. So, for example,
can you explain what limited and full service is?
Absolutely. So limited and select service is, just like your Courtyard by Marriott, your Hampton Garden Inns. It's effectively, the hotel, the room itself, and then maybe a cafe or something as compared to an upscale or a luxury brand. We often say that we're not going to own a Ritz-Carlton on the beach and we're not going to own a Motel 6. We like the kind of the middle ground that has multiple demand drivers. And by demand drivers, I just mean, folks that might want to go there for leisure activities or group activities or corporate activities. And what the limited and select service brands do is that they really have cost centers that are easy to control. So what I mean by that is going back to 2020 and during the pandemic, if you owned a Ritz-Carlton on the beach, that might be a beautiful hotel. But at the end of the day, it probably had 3 restaurants in it. It probably had a couple retail centers in it. And all of those are drags on the cash flow from the operations. And by having the limited and select service focus, it allows us really to control those costs as much as possible.
Okay. And there is so you were going to go into when I kind of backed up about the limited and select service and then wanting was I stopping you from going in another direction with this?
No. Limited and select services is where we like to focus in. Every once in a while, we'll do an extended stay brand because, again, from a cost center perspective, those are typically cash cows. They do really well and performed phenomenally during the pandemic. And so ultimately, we're pretty risk off despite being in hospitality. We really like to be more conservative, both from a leverage perspective, but also, from a brand perspective as well.
Yeah. And that's what I always like. When I go to your meetings and everything, it's like, you guys are always preparing for a recession. I feel like it's like there could always be a recession tomorrow. And that's how I think when I'm investing. I mean, anytime I'm investing anybody's money, it's like, okay, what if there is a recession? Like, that's just what you're always thinking about because you don't want to go through that. And like, you want to feel the minimal amount of pain.
Absolutely. If Greg Freeman, our CEO, was on here, he'd tell you that at the end of the day, we're just basis investors more than anything. You want to protect your downside.
Yeah, absolutely. And that's one of the reasons that I love you guys. Okay, so have we kind of covered like what Peachtree? Well, I don't think we've covered everything. Okay, so that's what you guys invest in. And so I want to go back to you guys build hotels. So that means develop them, buy the land, build them, get the contract, get it up and going, and then with the goal to sell it, correct?
Absolutely. So we have those opportunities that are out there. Those are challenging, especially in today's environment. But I would say that today is the day to be developing, frankly. When things are hard to develop, that's when you want to develop, especially when you think about the 7-year cycle of the property improvement plans. It creates, kind of like wine, vintages of hotels. And if there's less of a vintage, that can create some extra demand when you go to sell them.
And do you guys sometimes go and look for those 7-year hotels with the people that can't afford the upgrades, basically?
Yeah, that's a phenomenal opportunity that we're finding today. A lot of folks survived the pandemic. They kind of scraped by, but they spent a lot of the money that they had in reserves in order to do so. And so now the brands were really forgiving during the pandemic. Actually, they knew times were tough. The brands being Marriott and Hilton, but now that times are really, really good for hotels again, those brands are going back to those owners and saying, it's time to do that property improvement plan, Mr. Owner. Well, a lot of those owners, unfortunately, don't have the capital available to do so. And so a lot of them are now coming back to us in order to provide financing. And, you alluded to it earlier of what we do. We provide private credit. And, today's environment with a lot of the banks and other kind of traditional lenders out of the market, it's provided a great opportunity for Peachtree to step in. And at the same time, hospitality is a very, very small niche market. And we're known for being non-predatory lenders. In fact, it's difficult to be a predatory lender in hospitality due to its really kind of tight-knit community. Because if you start going and foreclosing on borrowers, real quickly, you're going to find that there's folks that just don't want to borrow from you.
And that's another reason I love you guys is not only that you can pivot. So you could pivot because you are vertically integrated is that you could go buy land or you could buy a hotel, you could build a hotel, whatever you need to do, or buy an existing hotel and remodel it. But then when that is not a feasible option in the market, then you can pivot and do credit. And it's not like you're doing it in a predatory way to get people to sell their hotels to you. It is, you are really actually restructuring their debt so that their payment is better. And you guys, you should see some of the ways that they do it. It just blows my mind, honestly. Does it blow your mind too, Brian?
Oh, yeah, absolutely. Yeah. I feel like every single day I get schooled by our C-suite of how to do things and how to make it mutually beneficial for everybody. Going back to the pandemic, excuse me. We bought about $1.8 billion worth of discounted debt during the pandemic. and didn't just turn around and foreclose on those people. We worked out the loans. Sometimes we extended the term. Sometimes we put different covenants in place so it protected us, but also made it mutually beneficial. And now a lot of those borrowers are coming back to us knowing that we treated them well in kind of the worst possible times. And they're more comfortable with us, even though, today's lending environment is certainly a little bit better for the lender than the borrower.
Right, right. Yeah. And I love just the creativity that there is with something. We're not going to get into that would be a whole nother podcast and would need some visuals for sure of ways that you guys restructure some of that credit. But it really is mind blowing to me that I'm like, wow, I would never think to do it like that. And obviously that's why there's professionals to do it, but I just think it's so great. And then even if you guys do restructure it, if someone does default on the loan, then you have first right of refusal to purchase that property, correct?
Yeah, a lot of times, even before we need to go to foreclose on somebody, we have the option to replace the operating company with our operations. And, we own or operate about 100 hotels nationwide and are really thought of as one of the premier operators. And so a lot of times we have the option to step in and avoid a foreclosure. But if it's necessary to foreclose, then we foreclose. And we plug in our operating company, ramp the asset back up. That's the goal. And then, sell it off.
Yeah. And by operating company, you guys, he means like operating the hotel with staffing and cleaning and getting groups in there for conferences and things like that so that you can get the revenue back up. And so again, that is why I like you guys. So I kind of want to pivot to another reason that I like you guys is because there's such a high level of friends and family that are invested in your funds. And do you want to speak a little bit about that?
Yeah. So, like I mentioned, we started as a family office. And so it really started as Jutton, Matul, and Greg, our three founders, going around to their friends and their buddies and saying, we've done this successfully for a while. Would you like to invest with us? And was the core foundation that allowed us to expand into, institutional and kind of everything else that we do. But yeah, a large portion of our raise of any of our investments is friends and family money. They typically, are the first people in the deals. They are repeat investors over and over and over again, and they can make up anywhere from 20% to more than 50% sometimes of individual investments. Sometimes even more than that. And again, it's important as an investment company to treat your investors well. And I think that it's indicative of us doing that they keep coming back to us to continue to invest.
Well, yeah. And I just call it having skin in the game. I like to invest in these types of deals when people have skin in the game. And if they don't have anything in, then I don't think that they're going to manage it the same way. And if you have your friends and family, I mean, like literally your grandma is in this fund, your mom is in this fund, you are going to manage it differently. You've got your own money in the fund. It does go differently, and you do have a different communication with your investors, all of that, it does trickle down. And so it's something that I love.
It's funny. I get these reports of, all of the investors that are invested in it. And there's a lot of Friedmans and a lot of Patels and a lot of Desais and everybody that's got a last name that works with us here. But also, our owners have skin in the game, right?
Mm-hmm.
They're investing alongside their investors and their friends and family. Again, that's sometimes 5% of a deal. Sometimes it's more, sometimes it's less. But they're putting their money where their mouth is.
Right, right. And I mean, they even grew up, in hotels, right? Like living in the hotel and operating the hotel and knowing what it is to put the plastic on the cups.
Absolutely. I think sometimes they like to distance themselves from that part of their lives. But we often talk about, they were cutting keys. Mm-hmm. They were cleaning the rooms. They were running the books.
I think that's important.
They absolutely grew up.
Yeah, because you see those shows, right, where the CEOs have no idea what, who the people on the ground are actually doing. And if you actually are in the trenches, then you actually know, whether that's possible. Is it possible to clean this many rooms in a day, or, that kind of thing?
Without a doubt. And, hotels can be kind of to a certain extent, a more attractive asset a lot of times than other commercial real estate assets from the aspect of the cash flows from hotels. There's typically stronger than many other asset classes. But at the same time, along with that comes a daily operating business and pitfalls. And, to your point, if you don't know how to staff it, or you don't know how much it's going to cost to renovate it, and what that's going to do to your occupancy when you renovate it, you can find yourself in a really tough scenario. And I'm very happy to be at a place that thinks of things, again, just from a conservative standpoint, despite loving the asset class. Obviously always wanting to maximize returns for investors. A big portion of that is managing risk.
Yeah. Do you remember when you joined Peachtree and I was like, oh my God, you joined the right company?
Oh yeah, absolutely.
I was like, you don't have to sell me. I love Peachtree.
It was one of my favorite meetings of all time, because I walked into it as a newbie at Peachtree and was just like, oh, people already love us.
Oh yeah. Oh yeah. I was like, you don't have to sell me. I already know everything, but let's meet or whatever. I feel like I could be the salesperson for Peachtree. It would be great. Okay.
Without a doubt.
Yeah. So let's kind of go into, and I don't want to talk about other funds, but you guys, I do think it's important to point out that Peachtree being vertically integrated and being able to finance, build, and to operate hotels, I think is very rare in the industry when you are looking at different hotel investments. And so that's another reason that I really like them, because you can cut costs in the different areas. And so you aren't just beholden to some company that you're going to hire to operate your hotels. It is in-house, and so they're all talking. So obviously that kind of creates an economy of scales. So let's go over some of the, I don't know that we need it, but some of the funds, there could be a fund with one hotel in it. There could be a fund with 12 hotels. There could be a fund with multiple hotels and credit, right? Am I kind of covering the gamut there?
Yeah, absolutely. So, we structure our investments in a way to really lean into what the opportunity is in the market, not the other way around, just to have investments that are out there. And that's really one of the ways that Peachtree Group shines. That could be, to your point, a single asset hotel development opportunity. That could be a multi-asset development opportunity in the form of maybe an opportunity zone. And the way that we look at opportunity zones, I think, is very different than many other sponsors that are out there, in that we don't let the tax tail wag the dog. And it's easy to want to do that from the aspect of, the 2017 Jobs Act, which created opportunity zones, created really some phenomenal advantages to investing in those. And so a lot of sponsors go out and they want to find the opportunity zone and then find an asset in that opportunity zone to develop. Well, that's, in our opinion, kind of the backwards way to do it. So what we do, and what we've always done, is we pick places that have demand drivers, that have certainly a growing market,
or a hospital,
a high barrier to entry, the right brand that we can put in there. And then if it happens to be in an opportunity zone, great. Now we can put it in an opportunity zone fund. So we have those. We have strictly credit opportunities. So this is, a lot of times senior secured, first mortgages. We primarily operate in shorter term notes, so 2 to 5 years. But yeah, you might see a pure equity fund. You might see a little bit of a blend. You might see a pure credit fund. Again, the opportunity zone fund. So we kind of have opportunities all the time. They might not be the same opportunities all the time. But again, I think that's one of the major reasons that people invest with us, because they know that we're not trying to fit a square peg into a round hole.
Yeah. And your track record is amazing. So I'm just going to say your track record is amazing. I can send it to you if your listeners really want to see it. But we're not going to go over what specific returns were for funds. But obviously I wouldn't have continued to invest with you if the returns weren't great and the communication wasn't great. And to back up too, you guys, opportunity zones are a new tax code that was just created, where if you have some capital gains or a sale from a business, you can defer the taxes if you go into this long-term investment for 10 years. There's a lot more to it. I'm just kind of giving the highlights there. Okay, so we've got all the different kinds. I'm kind of drawing a blank here on what to talk about next, because I have so many things I want to talk about. I think we should talk about the way that investors can invest with you, I guess, and what are some of the returns, because I do want to talk about what a preferred return is, because in these types of investments, you can either invest for growth, and sometimes people will invest for depreciation. And so in talking about the different ones that he was just saying, with the single hotels might be credit. If you're credit and you're lending, you're obviously going to be making interest and dividends on that. But if you own a piece of real estate, then some of that depreciation can pass through to you. And so there are different options. It's more that you're picking hotel as an asset class. And then, we kind of work with you on what are you trying to achieve or what do you need on your taxes and with your investments. So, so then kind of pivoting from there, when you do invest, there are minimums. You do have to be an accredited investor. An accredited investor is making over $200,000 a year or $1 million of net worth without your primary residence. So these are not available to everyone. And if you are an accredited investor, then there are some minimums, as I said, that you need to invest in the fund. But there's normally what's called like a preferred return. So would you like to explain what a preferred return is?
Yeah, absolutely. So the preferred return is effectively a return that starts accruing once you invest. So, we might not be paying cash flow right away, but effectively the goal is that the first 8%, and, just using an example of some of our previous offerings, previous closed offerings, that is, the first 8% of profit that comes out of the company, it really goes into what's called a waterfall. So you have priority over the first 8% of that money coming out, or the profit coming out of the business or the fund.
Isn't it your investment plus the 8%?
Yes.
Yeah, whatever your basis is, whatever you put in plus your 8%. Okay.
Yeah, absolutely. And then, in a kind of typical fund, we structure it where let's say it's an 8% preferred return. And then after that preferred return, there is a 2% catch up to Peachtree, which means that we get the next 2% profit after your 8%. And then everything going forward is an 80-20 split. So, we think that that's very fair. And again,
80% to the investor and 20% to Peachtree.
Exactly. So, in other words, it kind of is 80-20 the entire way. However, again, we do get that 2% catch up. So 100% of the 2%. But that's the typical structure. And then from an investor experience perspective, you're going to get quarterly statements, regularly emailed or mailed to you. We have webinars on a quarterly basis where we have our development team or whoever might be in charge of the different business unit on talking about what's going on in the fund with pictures, with graphs of all of the whether that might be the P&L, that might be our indexes against other properties or something along those lines. And then we also have what's really interesting to me is just an overall market update. And those happen periodically. They're not necessarily quarterly. Sometimes they're monthly, sometimes they're quarterly, sometimes they're biannually. And in those, we bring in third parties from outside of Peachtree. They're still focused in commercial real estate and more specifically hospitality. But it gives, not just Peachtree's opinion of what's going on. And, that might be somebody from CBRE or CoStar, or frankly, we had somebody on from the Fed previously. So it's a great opportunity to hear, again, people that are really well known in the field talking about what they think is happening in the market. And, you can compare and contrast that to what we're thinking. Obviously, a lot of time those things align, but they don't always. And it's just a great data point for people that want to learn more, especially for your more hands-on folks that want to learn more about what the deal is and understand the market and maybe how that might impact some of the other portions of the portfolio as well.
Yeah, that's true. And that is another thing that I like about you guys is, especially during the pandemic, was how transparent and you ramped up your communications versus a lot of people were a little bit more shy about their communications. And then I've invested in other deals and especially development deals. And I'll get one newsletter a year. And it is just crickets. And it's hard for people to invest in things and to not know what's going on. And I would say you guys really excel at the communication standpoint. And it's not just webinars. Your statements are detailed. The newsletters are detailed. It is really like next level compared to a lot of these other funds, because I think a lot of the ones, they spend a lot of time fundraising and then selling it to the advisor, and they're not spending as much time to do the communication with the investor. And you guys really do that well. And so that is another thing that I love about you guys. So
yeah, it's a lesson that not that Peachtree learned from me or anything like that, but it's a lesson that I learned from a good buddy of mine who was in the Army. That was effectively, I'd rather have bad information as soon as possible or bad news as soon as possible, because that allows you to act on it rather than, getting out into the field and then having a Humvee wheel pop off your Humvee or something along those lines. But, one of the things that's always drawn me to Peachtree and is really just really more than anything, Greg Freeman willing to be the really to have the spotlight on him. I don't think it's by any means something that he particularly loves to do. It's just an important part of the business. And, when I first learned, or, when I first was introduced to Greg was in 2020. Actually, it's May of 2020. He was on CNBC talking about what it's like to be a hotel operator. It would have been easy to hide from the spotlight at that point. And, he kind of hit it head on. He said, it's a tough time. We're plugging the holes in the ship, then we're riding the ship, and then we're going to go on the offensive. And I think if you think back to May of 2020, there wasn't really anybody that I can think of that was thinking about offense at that point. Everybody was defense, and everybody was frankly very quiet at that time. And it's definitely something that I think earned us a lot of, at nothing else, street cred.
Yeah, well, and it shows just how used to the ups and downs in the market that they are, that it doesn't scare them, and that, they're just like, okay, well, this is another correction and we'll get through it. So I think it's great.
And historically, we've performed better in times of volatility than not. And to your point, that when there's blood in the water, unfortunately, for some people that's a bad time. But for those that are investors, that's typically the time that you want to really start to evaluate those opportunities, because you could find discounts or whatever it might be.
Yeah, you might get some good deals. Okay. Well, I really appreciate you being on, and I appreciate all the information that you've shared. And you guys, I hope that you have at least gotten a glimpse to how these deals work. I think we've given you just a great overview of just a really good hotel fund. There are other hotel funds out there, but I think Peachtree is exceptional. And that's why I brought them on, and I had to really petition them to do this. I had to bother them to do it. So again, Brian, thank you for being on. I appreciate it.
Oh, no, we certainly appreciate being on. And we love hotels. We love what we do. We're really enthusiastic about it. We're enthusiastic about the opportunities ahead. And to your point, if folks want to get some more information, first and foremost, Google Peachtree. You'll see all sorts of good stuff, whether it's our website or Greg, our owner, speaking. And then, please reach out to Michelle, and, we can dive into things as deep as possible as you'd like. Our goal for investors is for them to be as comfortable as possible with the investment. We certainly don't want people investing with us that just happen to think it's the hot thing and jump in. We'd much rather have people that want to, understand the business.
Yeah. And you don't want them to be stressed out or worried about their money. And my investors, this is usually the first alternative investment that I put them in, just because you guys are running on all cylinders, and people love it because it's like you're investing in a business, but you don't have to do anything. But they say, and so they're making all this money, but they don't actually have to operate the business. They don't need to do stock trades, anything. They're literally giving you your money and then trusting you guys to do what's best with it. So, yeah. So thank you again. And thank you for doing a great job. Again, if you guys have any questions, let me know. If you have any suggestions for other podcasts, I would love to know. And thank you so much for listening. I hope that this inspires a little bit of your financial life. Have a great day.